sound quite impressive. Sound quite impressive when you read that. Again, I'm Brian Costello. I work for Envestnet Yodlee. I am responsible for making sure that citizens, consumers of all walks of life, of all steps in their life journeys, are able to achieve positive financial outcomes by leveraging the data about them that is held by their financial institutions and their quasi-financial institutions like their credit card providers and the billers, so they can use that data to engage with third parties that they've selected best suited to help them achieve those positive financial outcomes. And that indeed is the mission of Envestnet Yodlee. So I'm happy to be here with Silicon Valley Innovation Center. Yodlee has started right here about 20 years ago. So we're from the Valley, founders out of Stanford, with one mission in mind: to help consumers get better control of their financial lives. The situation around the globe, but we're talking about the U.S. Today, though I'm happy to talk about any other regime when we get to the discussion section. The industry today is very fragmented. So you've got hundreds of thousands of financial products available from all kinds of institutions, from big national banks down to your community credit union. You've got neobanks or challenger banks. You've got apps that are getting banking licenses, and we have financial needs. We have financial challenges. We have financial opportunities, all tied to our lifestyle opportunities and challenges. And for a banker, for somebody who is very literate in finances, it's difficult. For you and me, if you're not a banker, it's even more so. And it's compounded by the fact that we just don't have the time, right? We have jobs, families, we're dealing with a pandemic. So we can't really take full advantage of the financial products, the financial services, the financial opportunities to help us achieve those positive financial outcomes. So, as I said, that's Yodlee's mission. And this isn't a sales pitch. I just wanted to set a little context for you here. So we have a technology platform that allows consumers to engage with a third party, and then that third party can use our platform to allow their consumer to permission the use of their financial data. And that's bank data, credit card data, billing data, loyalty point data, anything that's looks like it's financial and is a transactional system. We connect over 21,000 data sources around the globe. We bring that data in, we normalize it, categorize it, make it fit for purpose, both for a human and for an algorithm, and then our client delivers their service. And those services are everything from just personal finance management, see all your accounts in one place, financial wellness coaching, wealth management, true fiduciary financial advice, credit and lending, using your alternative data, quote unquote alternative data, your transaction data, to help you qualify for a loan. Very important for folks with thin credit files or no credit files. And as I said, we do this around the globe. We've been doing it for about 20 years, and it is essentially a commercially managed ecosystem of pre-open banking, managed by contract. But it's not open banking. It is a commercial system. And open banking is what we're here to talk about. And open banking is really the opportunity for the people who are not expert in finances, and as well as them, to more safely, more reliably, more easily entrust their financial data to qualified third parties so that they can receive the benefit of that service. Whether it's an app to remind you that you've got a bill due tomorrow and it's not a good time to be buying that big screen TV, or if it's saving for retirement or a better house, a new car, paying off your debt, et cetera. This is open banking is an opportunity to enable consumers and to protect them symmetrically across the board. So open banking is not new. It actually started in the UK a number of years ago, sitting on top of the revised Payment Service Directive, or PSD2, and an order from the UK Competition and Market Authority to open up competition in the banking sector in the UK. Australia followed a couple of years ago with not a regulatory order or a market order, but a very sweeping, very forward-looking and privacy regulation called the Consumer Data Right, which basically codifies the principle of open data, which is citizens or consumers should know what.
Sorry, Brian. I think we lost your deck for a second.
I think you did. Yeah, I see where I'm reconnecting here. So I'll just sit on this. I'll just sit on the slide for a second.
Yeah. Sorry about that.
No, I think it's on my side. I just got a pop up that said I had a port scan.
Yeah.
Let's try this again.
Yeah.
Where'd I go? Right here. The joys of working from home, right?
You're right.
So Australia, yeah, right. One of my kids must be on Disney Plus. Australian Consumer Data Right says is basically the open data principle, which is as citizens we should know what data our government institutions have about us. We should be able to access it, correct it, use it, and the institution has a right to protect it. Open data is along the same lines. As customers of our financial institutions, we should be able to access the data they have about us, correct it, use it, permission its use, and the institution has a right, has an obligation to protect it. It's very much along the lines of data ownership, not in a contractual sense, but data about us is our data. Data about me, not just my name and address and social security number, but the accounts that I have at an institution, the interest rate I pay on my credit card, the transactions that I have that describe my behavior. That's my data. It's not the bank's data. The bank is a steward of that data, servicing me. And so open data says I should be able to get to that. That's what the Consumer Data Right says. In the US, we have no federal privacy regulation. We have no nationally consistent affirmative right to our data held by our institutions. We have some state privacy laws, certainly in California. We should be familiar with CCPA and the CPRA. That's coming in November. But those are focused on primarily on protection, and portability of data is part of privacy, but most of these state rules are focused on protection of data in response to data breaches. And so it's important to understand that, and I'm going to give you all a call to action at the end here, if I may. And it's important to understand that you, as consumers, you have a right to your data, and you should be able to exercise that right in a responsible, legal way. So absent a privacy regulation at the national level, and absent a regulatory or statutory open banking push in the US, we are solving it commercially. In fact, the US Treasury, in a very, very important report they wrote in 2018, said, and I'm paraphrasing, we think open banking has a lot of benefits. We would like industry to solve the problem. And indeed, that's what they're doing. It makes sense. That's how we do things in America. It also makes sense because for an open banking regulation to happen in the US, lots of other regulations would have to be opened up. If you're a bit of a policy wonk like I am, you'll know that the Dodd-Frank Act, Title 1033 says very succinctly that banks need to make the data they have about their customers available to the customers via an electronic means. The Consumer Finance Protection Bureau has the power to make rules on Dodd-Frank, and especially 1033, but they haven't done it yet. They have been studying it and studying it and studying it and doing a very sincere and a very good job of it, in my estimation. But they haven't made a rule yet because it's such a complex environment that any rule they make right now, unless it's very well considered, could be shot down. And so that's why why we can't wait for regulations, why we have to have open banking in the U.S. And certainly, oh, and there goes my connection again. Hopefully you saw the transition to the U.S. open banking revolution is coming, just some headlines. Open banking is a hot topic in the trade press, in the financial press. It is getting some take up in the popular press, and it's an important topic because it can help. Catching up here, I have to reshare my screen because of the impact it can have to help individuals achieve positive financial outcomes, improve their financial well-being. And if done right, we're going to have enough financially healthy consumers that we're going to have financially healthy families, communities, and ultimately, again, if done right, it's going to have a knock-on effect to public policy issues, keeping people off the welfare rolls, access to housing, access to education, solving for underfunded retirements, which, absent bad behavior on Wall Street, we believe will be the next financial crisis, underfunded retirements, when we hit critical mass. So open banking is important. Is it revolutionary? Well, at Yodlee, we don't think so. We've been doing a flavor for 20 years, but it's certainly important. So open banking, 4 primary actors in the ecosystem: the consumer, that's you, that's me. There's the application or the service provider. So that's the app you download from the Android store to help you with your budgeting. That is your mortgage lender, who rather than have you bring in PDF statements of your bank accounts, gives you the opportunity to link your bank accounts to your application, and so they can pull the statement data to support the information that you've provided. It is your tax advisor who's using a digital experience. It's your registered financial advisor who's taking a look at all of your transactions, your spending, and your savings, so that they can give you good fiduciary advice. Right? A proper advisor is not going to give you advice to purchase a speculative equity if you don't have $400 in the bank, or $500 or $1,000 in the bank to weather an unexpected expense without going to credit. So all of those are application providers who use aggregators, data aggregators like Envestnet, Yodlee, to connect to the banks via screen scraping technology. In the future, to use open banking interfaces. And then you have the data provider, that would be the bank, the brokerage, the biller, et cetera, with whom you have an account relationship. So, and again, I apologize. I actually think it's my new antivirus and firewall that's causing me to disconnect. So, okay. So what is open banking in its nutshell? Open banking is API-based access to the bank data. So today, Yodlee and other aggregators screen scrape. We go in through the customer interface, the web or the mobile interface, to access your data on your behalf with your permission, of course. We authenticate using your credentials. So if you're using a Yodlee powered service today, or any aggregation powered service today, for the most part, you are entrusting your online banking credentials to maybe your application or service provider, but more likely you're entrusting it to the aggregator who uses those credentials on your behalf to pull your data back. This certainly is, well, it's undesirable, right? One of the first rules of password security is you don't share your passwords. And then the third tenet of open banking is transparency and control. As the consumer, you can access, view, and control how your data is being accessed by your third parties and how they're using it. So you have more granular permissioning on what data is being shared with your provider. So for example, today, if you've got your login and password gives you access to 3 accounts at your bank. One of those accounts is where you receive your alimony. You don't want that account considered by your lender as part of their underwriting decision. Right now, today, the aggregator is going to get access to all 3 accounts, and then is going to have to do the work to strip out the account that you didn't permission for the lender to see. With open banking, implemented the right way, and we'll talk about that in a second, that account data doesn't even come down, doesn't even make it to the aggregator. So you have more control, more transparency. The financial institution, your financial institution, today, if you're using a Yodlee powered service, they see Yodlee Connect on your behalf, and they say, well, Mary Smith here is clearly using a Yodlee powered service. We think it's okay. We hope it's okay. Let's give the data to her, to Yodlee for her. In an open banking world, they will see that it's Mary Smith coming in using this financial app, which uses Yodlee. They know that this financial app is a persistent use case of money coaching, so needs to see a year's worth of transaction data and needs to have that refreshed every day. And so they can match the release of the data with the intention of the customer and the application. And you could go to the bank and say, who am I sharing my data with? There will be a dashboard where you can say, you know what, I remember I signed up for that app a year ago. I don't really use it. Let me just connect it here. So you will have, as a user in an open banking ecosystem, you have more control, and the parties in the ecosystem servicing you, the app, the aggregator, and the financial institution, have more visibility into what the other parties are doing, so that we can collaborate on enabling you to achieve better financial outcomes, but also to protect you from harm, from outside harm, or from potential harm from any of the other parties. So I think I talked over this slide already. How does it work today? You pick a service provider, you pick an app, you link your accounts, you entrust your credentials to the aggregator. The aggregator uses those credentials to log on to the websites, or sometimes the mobile sites, usually it's the websites. Download the data that you've requested to power the app. There's a lot of trust by the consumer in this ecosystem. There's a lot of trust by the financial institution in the way this ecosystem works. And so that's why we want a better, more transparent way. So the way it will work is something you should be very familiar to in other areas. You'll still pick the application provider you want, the app, the service, the brick and mortar service provider. You'll go through their terms and conditions. You'll make sure that the services they're providing you are correct, that you're comfortable with how they do it, that you're comfortable with the character of the company and its people, so that because you are entrusting financial data to them. When you link your account, you will be in the online experience redirected to your bank. So if you say, I want to link my Chase account, you'll be redirected to Chase, and you'll authenticate to Chase the same way you do on their website. So Chase will see you coming in, username, password, the multi-factor authentication, or the picture, whatever security that you've selected for access to your account. You'll go through that with Chase. At the end of the authentication, they will ask you to just confirm. We see that you're using Acme FinTech app powered by Yodlee. You would like us to release transaction data and some account information. This is a checking account, this is a savings account, this is my interest rate, and a year's worth of transaction data. And you would like us to do that every time they ask until you tell us to stop. Is that correct? Yes, that's correct. Or you could say, no, don't give them this account. If it was a lending use case, the bank would see, hey, we see that looks like you're applying for a loan with XYZ loan company. This is going to be a one-time data pull of 90 days of statement data. Is that correct? Yes. At the end of that, the aggregator, Yodlee, gets an OAuth token. So OAuth is a technology that is used for this sort of federated authentication and authorization. If you log into Zoom with Facebook, if you play Words with Friends and log in with Facebook, or use Gmail or use Google, you've used OAuth. So it's a very, very popular, very familiar, very tried and true technology. And it's a very safe technology with the extensions that we've made to it. The industry has made to it for this multi-party system. So you get access to your data. You did not have to entrust your credentials. You have a granular access token that has aspects of data restrictions, enforcing data minimization, data life, and you can rescind that token without having, for just that app, without having to, change your banking password as you would today, and then remember all the places that you put it. So open banking provides the consumer with more safety, more symmetric protection, depending, so every app, every aggregator, and every financial institution is working together out of the same playbook, the same specs, which provides that symmetric consumer protection, so that, because we don't want to compete on consumer protection. We want to compete on the merits of our solutions, but we want you, the consumer, to have, obviously we want you to have the experience you want to have for the enablement, but we want you to be protected consistently across the board. So more visibility, more transparency, more control over your data. The API technology is just inherently better than screen scraping, so you have less requirements to interact with your app, right? Many of these apps are set it and forget it. I don't log in every day and look at something. I put some rules in and I get alerts. I get budget alerts. I get spending alerts. I get an attaboy when I hit a savings tier, or I'm doing roll up savings and I'm making micro deposits to my 401k. So it's just a better technical experience all around. The app provider, my customer, has a better technical solution, a better security solution, and therefore is able to offer their service and attract more customers, thereby helping more, getting more adoption of their good services, meaning hopefully impacting positively more consumers. And the banks have that, something that they've been missing for a long time, which is increased visibility into their customers' behaviors, so that they can enable the requests that are valid, but do an even better job of protecting the customer from fraud. It also helps them on the back end because screen scraping is operationally intensive for them. The more successful the financial technology world has been, over the last 20 years, as I said, we all come in through the customer direct interface, the website. As aggregators and aggregation powered solutions have grown, banks have had to put in more and more web servers, more and more bandwidth. It's expensive. We appreciate that. So it also helps them with their regulatory imperatives for customer protection, understanding where the data is going, and as I said, managing fraud. So I want to highlight an organization here that's making a lot of this possible. So open banking there's two main aspects to open banking. There's the technical implementation, and then there's the governance. In Australia, we talked about the governance coming in starting with the consumer data right legislation, and then the order for open banking under that. By the way, Australia is following that up with open energy and open telecom, two big areas. In the UK, the revised payment service directive is entered into law in the UK. It's called the Payment Service Regulation 2017. And then the open banking implementation became the technical. So that was the governance, and then the technical implementation is the open banking, OBIE, Open Banking Implementation Entity. So in the US, without the statutory or regulatory, we've got to handle the technical and the governance. The way we're handling the technical is primarily through the Financial Data Exchange. FDX is an industry group with a singular mission to develop, maintain, and curate a royalty-free interoperability standard for consumer permission data. In other words, it's the API specification, the data model that's behind it, and that OAuth flow, the authentication, the authorization, the customer experience for the consent journey, so that the customers are getting that symmetric protection, that symmetric experience I talked about. The app providers know the rules of the road. The aggregators have a standard, an API standard that they consume that is fit for purpose with the right service levels, the right data behind it. And then the banks just need to publish a single endpoint for consumption across the board, a single well-managed endpoint. FDX is not a new idea. We actually started it. So FDX was constituted, I guess, really germinated in 2015. But prior to that, industry had been working on it for a number of years. You might be familiar with the OFX standard, the IFX standard. The Financial Data Exchange has actually brought in the OFX under its umbrella. But we're handling the technical standard, and Yodlee is a founding member. Handling the technical standard, principle-based, so that consumers, FinTech, or I should say innovators, FinTech, banks, anybody, can participate on a level technical playing field and compete on the merits of their application. FDX is open to anybody in the ecosystem, and if you are really interested in how open banking is being done in the U.S., I highly encourage you to go to the website and check it out. I'd be happy to chat with anybody after the session or during the discussion more about how that works. So I'll just wrap it up by saying, open banking is revolutionary, maybe evolutionary for sure. It should enable, if done right, consumers to achieve positive financial outcomes, to improve their financial well-being in a very personalized way, right? So we talk a lot about your life journey, right? You go to university, you graduate, you get your first job, you're getting nicer and nicer cars, perhaps. You fall in love, you get married, or you don't get married, but you have children. You buy a house, a bigger house, a second house, start thinking about retirement. Your data, your financial behaviors across the full spectrum of saving, spending, borrowing, planning, and protecting can be used responsibly to help you get the best results, best financial results, no matter where you are, for your very personal life goals. It's also very important for vulnerable people. And one of the things that this pandemic has shown us is that there are a lot more people than we thought that are one small step away from vulnerability. U.S. Treasury did a report a few years ago. UK Treasury did the same report, a similar report for their citizens. The number of people that cannot survive an unexpected expense of either $400 or I think it was 400 pounds without going to credit is staggering, and it's disappointing. And so what this pandemic has shown us is that many more people are one step away from vulnerability than we thought. And so financial well-being is even more important right now. And we need to put a lot of focus on vulnerable people. And indeed we are. The FinTech industry, and certainly right here in the Valley, we see lots of companies that are doing some fantastic work, helping single income families, helping gig workers, helping people that have been furloughed. We see the companies that, the non-institutional lenders helping out with the government stimulus packages. So open banking has some serious potential to help our country. to help our citizens, and as I said, have a knock-on effect to public policy. Stronger, more safe, more resilient financial ecosystem, and a platform for responsible innovation, whether you're FANG, Google or Apple or Netflix, or if you're two girls in your dorm room at Stanford with a killer idea and you want to get it out there and start helping people, open banking is a way to do that. So it's not without its challenges. So I talked a lot about the implementation. Absent the regulation, the governance of open banking in the US is still being handled by contract, by bilateral agreements between the data aggregators, the data consumers, and the financial institutions. Because of the fragmented ecosystem, regulatory ecosystem, fragmentation in the regs, the statutes, and the prudential guidance, many of the banks, your banks, are treating this as a compliance exercise, as a risk management imperative, and they feel sincerely that they have to restrict your ability to access your data and permission its use. And they can do that now. Where before you were entrusting your credentials to your service provider's aggregator, and we were getting the data that you needed, that you intended us to get, that you permissioned us to get. With the API, the bank, because it controls the endpoint, can make a determination that, Mary Smith is using this application, and we don't think it's a financial wellness application, and we know that this application might recommend a different credit card, and therefore we're not going to give her the APY, or the APR on the credit card that she's paying. We're not going to make it easy for her service provider to get that, because that algorithm, because that might disclose some of our algorithms for lending, and that's intellectual property. And so we have these headwinds. So your call to action is, if you agree that your data, it's your data, and you should be able to use your data and permission its use responsibly, tell your bank. Or if you find that you're using an application and you're not getting the data you need, tell your bank. Or if you're of a mindset to tell your regulator, or tell your friends. But advocate for your right to access your data, use your data, and permission its use to responsible third parties. And the other call to action I would ask you to do is think about your financial well-being. Think about your lifestyle goals. Think about your level of vulnerability. If you're in the space, think about your customers and how can you provide them with hyper-personalized solutions for them to achieve positive financial outcomes or avoid negative financial outcomes using open banking, and then get involved. And you don't get any more personalized in your solutions than you do when you're using your customers' real-time data to understand their financial behaviors. Thank you. I hope that was interesting. I certainly enjoyed the opportunity to talk about it. And with Silicon Valley Innovation Center's indulgence, I'm happy to take some questions.
Absolutely, absolutely. So while our participants are shoring up their questions, so a quick question on that, right? And I think it's very clear to how consumers would benefit from it, and how in general that it helps to offer better products, to add transparency, add different opportunities to do the new business. But what about from the company perspective? So how do you communicate with the companies? How do you transfer the message to those traditional businesses who historically have been very, very reluctant to share in the data, who thought that their opaqueness is their competitive advantage? How do you shift that mentality for them?
Yeah. So you're talking about the banks, or the brokerages, or the data providers. Yeah. So it's a fair point, right? And we know from the advertising world that data about your customers is incredibly valuable, and it's valuable when you have it and your competitors don't. And that becomes the slippery slope of what we're doing here. So, again, I'll point to the UK. So in the UK, their open banking came from the Competition and Markets Authority, who said, we need more competition in financial services, or consumers need more competition in financial services. So there are 9 big banks in the UK. They're called the high street banks, or we call them the CMA 9 now. These are the 9 banks that were part of the first wave of the order. And this open banking order came after a report from the CMA about how difficult it was for banks to switch, how difficult it was for consumers to switch banks, because the banks wanted to hold on to the customers. So in the US, when we're talking to the banks are actually coming to us. The banks are coming to the table at FDX. So the banks are at FDX. The Financial Data Exchange, as I said, is an industry consortium. There are banks, aggregators, what we call permissioned parties. So they're not chartered financial institutions, but they use financial data. So like the credit bureaus or brokerages, and technology companies, names that you know. So we're all there to do the standards. The first thing that we agree on is we want to get end user credentials out of the ecosystem. The second thing we agree on is that APIs, technically, APIs are inherently better than screen scraping. Mm-hmm. Less operationally risky, they're faster. So the banks come to the table to have that conversation. We then talk about the data model. So as a matter of principle, Envestnet Yodlee believes that all data that is available to you as a customer via the bank's native interface, so when you log on to the website, open banking website, when you use your mobile app, all that data should be available to you via the API for you to access and for you to permission its use. The banks don't agree. They want to hold on, and so this is where we come to the heart of your, the response to your question. Personal information. Should we give out the social security number? Well, if you have it on the website, right, and maybe it's in your tax form, right? It's usually masked on the website, but some online banking portals you can access it. If it's there and the customer says, please give it because it's needed for a lending use case or a tax filing use case, why won't you let the customer access it? Well, there's not enough security, it's very sensitive. Right, but the whole idea of building this ecosystem and building these standards that we're building is to make sure that all sensitive data is handled appropriately. The example I gave about APY, APR, there's a financial institution that feels that the customer isn't entitled to that, or isn't entitled to permission that those data fields because it's used in some of their back-end algorithms. Okay, but it's certainly not sensitive. Your algorithm is commercially sensitive, no argument. But this data element on its own, even though it's used in that, isn't commercially sensitive. An example I say is I know that Kentucky Fried Chicken uses 11 herbs and spices. I know salt is one of them, right? Don't tell me you're not using salt. So salt is not a secret recipe for Kentucky Fried Chicken, in the same way that a APY is not a protected data element for any financial institution. So the banks come because they want to manage the operational risk, they want to manage the security risk because their customers are demanding it, but they're not all uniformly participating 100% to enable the full, the full utility that we have today. And so that's why I did, I very boldly, asked you all to, if you agree and you have an opportunity, make sure you tell your bank that it's your data and you would like to access it and permission its use to qualified third parties. And that qualification is being built by the very people that are, partly by the very people that are concerned about the viability of the ecosystem. So that doesn't really seem right. Now, there are many forward-thinking institutions that are not treating this as a compliance, solely treating this as a compliance exercise, but are using their customers or their members' data in very exciting ways to help them achieve positive financial outcomes. There are, the major brokerages that offer, portals and tools for self-directed investors. They're all using aggregation. All of the big banks have some aggregation that allow you to link all of your accounts that you have at other institutions into the online banking experience or mobile experience, so that data can be used to provide you with recommendations for better products and services, to give you coaching, to help you qualify for lending, if you should, right, get the loan. Underwriting is, there's two aspects of underwriting. We want to make sure that everybody who qualifies is approved, and everybody who isn't ready or isn't in a position to get that, doesn't get that loan, that extension, doesn't get it. And so sometimes, sometimes it's the same institution that's doing very innovative things with data, but the other side of the house doesn't want to give their data up. And so, absent regulation, this is the asymmetry that we're dealing with. There's another organization, you mentioned it in my bio, FDATA, the Financial Data and Technology Association. Yodlee is a founding member. We are the voice of FinTech in Washington, in Ottawa, in London and Canberra, and all around the world. We are a trade association who works for better regulations, new regulations, better harmonization of existing regulations. Be happy, it's fdata.global if you're interested in that as well. I think I answered the question. I got a bit professorial. I apologize.
No, I think it's actually really good. So I have another question. So if open banking is the solution, what are 3-4 problems innovators could address to drive disruption in this space?
Right. How much time we have? 4 hours? So I got to give you a sort of a small caveat here. So Envestnet Yodlee, we focus on the platform, right? Providing the data to innovators across the full spectrum of behaviors. So saving, spending, borrowing, planning, advice, and protecting, insurance. And so we have solutions that we think are very innovative that our clients can license and white label and put out there. So we've got a pretty broad view here. But now let me answer your question, and I'm going to give you probably 80%. This is Brian's answer, 20% Envestnet. But then there is no conflict. I think one of the first things we need to look at is digital engagement for people who don't have the time, the literacy, or not even literacy, familiarity with digital engagement for folks without time or capability to provide them with the advice that they need, or provide them with the tools that they need to manage their money. And some of the more interesting opportunities are, for example, gig workers, right, who have multiple streams of income. They've got side hustles going. They've getting a view of what's coming in, right? If I drive for this company, I can access my funds right away. But if I deliver food for this company, I've got to wait a week. Getting the gig worker a view into their income stream, and then obviously, what their liabilities are, so that they can say, you know what, I really need to pick up another shift, or I need to not buy that big screen TV, but unfortunately it's not a big screen TV, is it? It's a new pair of soccer cleats for their kid who just, you know, ripped the toe out of the ones they have. I think especially here in the Valley, that's a very interesting and important use case. Kind of adjacent to that, and I think it's being done very well, but look, that doesn't mean there's not innovation possibilities. Hourly workers, providing them with access to accrued wages so that they don't have to go to a payday or a predatory lender at the day before the end of the week. I think that's an important innovation. On the other end of this, I think better lending decisions, better lending journeys, taking in not just financial data. I'm pausing here because I want to be careful, but I'm going to say it. But taking in social data and making responsible decisions so that lenders can lend more, can be more comfortable lending. I think that's right for innovation. And on the other end of the spectrum, on the wealth side, you know, we want, selfishly, and as a public policy issue, we want Envestnet Yodlee. We want more people to move up the ladder. We want more people to get into the mass affluent, you know, and high net worth, right? That's because if that's what they want, and if that's what their life, you know, that's the lifestyle goal. And indeed, a lot of our products are designed to, you know, once you improve your financial wellness, your financial well-being, you get better control of your money, your finances, your ins, your outs. You're making, you know, you've got the best phone plan for your family or the best media plan, right? And you're saving enough. That's, at a certain point, that becomes capacity for investment, and you can start, hopefully, with the right advice, start making big strides in your financial, in your assets and your ability to sock money away, to buy a house, to feel more comfortable about your retirement, or just to feel comfortable that your car can break down and you're not crying on the side of the road because you don't know how you're going to get it fixed. So on the other end of the spectrum, wealth engagement, not just with the wealthy person in the family, not just with the matriarch in the family, but how do we engage the entire family with tools? Again, it's got to be the right type of engagement, the right time, the right advice, so that we build literacy and awareness. So you can probably tell from the picture, but I'll date myself here officially. When I went to school, I think it was in 3rd grade, we learned how to balance a checkbook. We learned basic finances. My kids don't learn that in school now. And that's a big problem. In the UK, they've launched a multi-year, 10-year campaign called the UK Strategy for Financial Wellbeing. It's 5 domains, and one of the domains is financial education, getting just the basic stuff that you and I take for granted, getting that into the kids' heads so that that becomes part of their financial DNA, right? Spend less than you earn, right? Think twice before you take on paying interest on a depreciating investment, right? A penny saved is a penny earned. So how do we engage in a wealth context with an entire family and get the kids, with an app with some gamification, behavioral economics, or nudging, all that good stuff, responsibly, to build better habits, become more financially healthy as a habit, and then get them on the ladder. Because I had a wake-up call when I graduated college, and I wish I had had the opportunity, and I want others to have the opportunity to have a more gradual transition to adulthood and the fiscal realities of that. So there's a couple ideas. I hope those are helpful.
Yeah, definitely. It's actually, I just want to add on it. So some of the things I think that innovators in the retail space can actually look into what is being done in the B2B. So for example, a lot of things that you noted, that you mentioned, like, like a payday advances, like companies like Fundbox and others are doing some of the more precise cash management and the lending limits. This is exactly what Brex is doing, right? So pretty much there,
Yeah.
it's what is profitable right now in the B2B is pretty much what will be profitable in the B2C just down the road. So I think that if you can look into the innovation, what's happening to B2B in this kind of transparency space and the access space will drive the future innovation for the B2B.
Yeah, I think you're absolutely right. And some of these aren't new, right? I mean, you at a point of sale, being able to get financing right there, that's not new, right? But the merchant used to have to offer it. It was usually through a big company like GE Credit. They had to get on the phone and they pulled a credit report. That's not helpful. And in fact, I did that. I did that for an engagement ring. I mean, again, a long time ago. These opportunities. So you're absolutely right. But when you're presented with the opportunity, you need to know if it makes sense for you. Oh, I can spread my payment out over 4 payments. I can spread the cost of this purchase. I can get the purchase now. Right? I don't think anybody does layaways anymore. You're going to get the purchase now. I get the benefit now. I get the endorphin rush now. And I don't have to pay for it later, or I do it in micro installments. Okay, that might make sense if what I'm buying is a replacement refrigerator because mine just died, and I get paid regular salary every 4 weeks, and this is helpful for me so I don't have to go to credit. But it's not if I don't have the financial awareness or literacy to say, hey, I can leave here and still go to McDonald's and load up on French fries, right? So capability is one thing, but helping consumers understand the impact of their choices is really part of the responsible innovation.
Yeah, definitely. And another question, I think that again on the consumption side of this data. So, are there licenses or charters required to operate in open banking versus traditional banking as an innovator in the fields like wealth or lending engagement? So, I assume that maybe just take it a little bit further. What are the requirements to access the data, the customer's data, from that perspective?
Yeah. Right now, today, in the U.S., it's all commercial. So unless you're doing a regulated activity like registered financial advice, payments, or taking deposits, there is no licensing. You would need to. I'll speak for Envestnet Yodlee. You've got a great idea. You've got an app you want to offer to consumers. That needs their financial data. They needs them to permission the financial data. You go to our developer portal, developer.yodlee.com. You check it out. You play with the APIs. You sign up. You start using your own data. Then maybe you move up to friends and family. You sign a contract. That's how you do it. And you do the same thing with our competitors. In the future, what we're envisioning here is you will get your app certified against a conformance standard for FDX. That will be making sure that but the enforcement of it will still be handled via the aggregator. So let me take that scenario I just gave you. 3 years from now, you go to our developer portal, you play with our APIs, you decide that we're the right partner for you. We will put you through a governance process, and we will assess your ability to not just sign the contract, but to meet the requirements of the contract. So risk, security, privacy. We'll look at your disclosures. We'll look at how you're getting the permission. We'll make sure that you're encrypting the fields you're supposed to encrypt, because there is no regulation. Now, you go to the UK, you have to be regulated by you have to be authorized by the prudential regulator, the Financial Conduct Authority. You go to Australia, you have to become accredited by the ACCC, which is their folks. Canada, we're not quite sure yet. They're still doing they're doing their second round of open banking consultations. We think there's going to be an accreditation. We hope there is. We're advocating for it. So right now in the US, if you've got an idea and it's not a regulated activity like money movement, registered financial advice, you know, stocks, I mean, you can give money coaching or lending, you can access the data.
No, that makes sense. That makes sense. And then in your experience as the IT risk manager, what are some of the key points that you think we still need to make and we still need to address to actually unleash the full potential of the open banking, not only maybe for like general retail customers, but maybe talking about, you know, high net worth individuals, maybe with someone who wants to invest in some exotic types. What are some risks and what are some developments that you see that need to be addressed before the open banking really shines?
So, yeah, you said you called me the IT risk manager. I don't recall if it was in my bio. So, for 9 years, I was the chief information security officer for Yodlee, looking after the full compliance, security, privacy, and an enterprise risk program. And so I have a point of view on this. It's not unique. What you need to do as innovators, excuse me, what you need to do as innovators, if you're looking at your solution, you're looking at your opportunities, you've got to do the basic due diligence, the basic homework. You have to look at your data flows. Where does the data go? How is it getting there? Who can touch it? Who can see it? You need to understand what data do you need, and apply principles. Apply the principle of data minimization. Only get the data that you need, and only hold on to it for as long as you need it. Only share it with the people that have a need to know. Build a control program. Put your preferences on technical preventative controls. So encrypt all data in transit. Encrypt data at rest to the greatest extent possible. Possible meaning commercially reasonable, right? If you've got a data element and you need to read it, everybody needs to read it every time. And you're decrypting it every time. That doesn't make sense. But if it's a sensitive data element or potentially a sensitive data element, in combination with others, think about encrypting it or other controls. Implement, again, principles, least privilege, enforced by role-based access control with good audit. Have an eye towards the threats, both internal and external, and think about them. Again, this is all homework and due diligence. Do this before you start building and coding. And one of the challenges we have in their very innovative ecosystem here is this takes time and this takes money. And if you're in a seed round or your A, B round even, you've got to prove out the viability of your solution. And I'm sure everybody has good intentions of doing the cleanup and doing the due diligence and doing the homework and adding the security and the compliance and the risk management after we've proven it out. And I understand that's a fiscal reality. At Envestnet Yodlee, we've tried very hard in our developer experience to bake that in from the first engagement with the developer, so that the developer is building in an environment, not just with us, but we're giving them the tools to think about the data when it leaves us, to think about their customer engagement. And we're doing this with FDX as well, with the consent flows, which is and some of the security. But with our developer experience, we've got that challenge in mind and that fiscal imperative, so that the venture capital companies, when they're making investments, they want you to prove out your model, and they're giving you a little bit of money, and that money just you can't spend it 3 times. You've got to spend it 1 time. But we feel that if you're doing it on the Yodlee platform, we're giving you that leg up on that due diligence, on that homework, so that when it comes time for you to expand and take over the world, that's already part of your DNA, both your the way you think about it and the way you code to it. Was that helpful?
Yeah,
I think I
absolutely.
answered the question.
Yeah, and
Okay.
and probably the last question, just being
Yes,
respectful of
please.
everyone's time. So, what another really open kind of banking and open and transparency framework is the blockchain. So, do you see any kind of blockchain and distributed ledger adoption in this open banking concept?
So, looking on the horizon, distributed ledger as a system of record should be critically important in a missing component of open banking, and that is ID and consent management. Remember I said we're still using OAuth. We're still reliant on identity verification, identity providers with federated identity management. For this really to work, for an open data initiative really to work, okay, now this is Brian talking. This is not necessarily Envestnet Yodlee. We need an identity system where the consumer is able to control their identity, present themselves, and have that identity verification be unassailable. And your consents are attributes to your identity, part of the digital record that are viewable and enforceable by anybody that as a consumer, you're engaging with. So that's my financial consent, my healthcare consent, my favorite pizza topping, right? They're attributes of my identity that are important for my service providers to know as I'm engaging with them. Distributed ledger obviously should be a big part of that. There's a few things going on. I mean, look, we're in the Valley. Everybody knows about FIDO. Everybody should know about the Sovereign Foundation. So these problems are being worked, and we're starting to see some solutions. Unfortunately, in the banking space, the solutions we're seeing are still federated with the bank and the role of the IDP. You might say that's not a bad choice, right? Because think of all the KYC, the know your customer that they go through now. Okay, I'll buy that. The bank institutionally, banks seem like a good choice, and in fact, that's what they're doing in Canada. The major banks have banded together. They have a coalition. Coalition is probably the wrong word, but they have a company that does identity verification. They can share it across. But for this really to work, for any open data initiative to really work and to be put into practice and get broad adoption and have that high level of symmetric consumer protection without with high resistance to anti-competitive behavior, we need a better identity management system.
Yeah, definitely. All right, Brian, thank you so much. I think that's all the questions that we have for you. Thank you so much for sharing your insights with us, and have a wonderful rest of your day.
It was my pleasure. Thank you, everybody. Enjoy yourselves and be safe.
Perfect. Thanks so much.